Is China going into a recession? It's reduced 2 key interest rates yesterday. Not 1, 2 key interest rates. Now, it's only reducing interest rates to provide liquidity to a very, very downturn market. The global economy is suffering generally from a downturn, and China is participating in that downturn. China growth has stalled. Also, the exit from the lockdown of the pandemic was thought to boost China up. Initially, China did rise, and then it's faded, it's stalled, it's paused, it's come to a stop. So China is likely heading for recession. In fact, analysts on Wall Street have downgraded the growth of China from 5 or 6% to around about 2.5%. I expect by the end of the year, into 2024, expect China to officially be in a recession. So what's the problem? It's the number 2 economy. What's the big deal? Why are we impacted from it? The reason being as follows. Back in 2008, 9 and 10, it was China that saved the Western global economies. They sucked in all the available commodities, huge buying, huge building, and that boosted what effectively was a recession as a result of the banking crisis back in 2008 when the banks collapsed, whether it was Lehman's, Bear Stearns, European banks, Canadian banks, US banks, UK banks, all failed. China came along and saved the global economies by buying a load of goods in. This is not going to happen now. It's not going to happen a second time. Now, China's property or commercial property sector and generally its real estate sector is in shambles. It shatters. It's being completely destroyed. And what the Chinese are worried about is that downturn in the property sector will lead overall to the general economy. So they want to improve and increase liquidity to allow China to get back on its feet and grow. Not going to happen. They're not going to rescue the property sector. It's going to be years before that property sector gets back on its feet. So what's happening in the rest of the global markets? Well, Wall Street, the Dow, and the Nasdaq have just started to take a little bit of a correction after a massive jump from January all the way through to now. Now, there's a lot of bulls out there are saying this is a bull market. Why is this channel so bearish? Why am I so bearish on Instagram and on TikTok and on YouTube? It's not that I'm bearish, okay? Originally, I used to be a bull. However, with rising interest rates and reduced liquidity, I look at fundamentals. And fundamentally, this market is going to go into a recession. It's not broad-based enough, the growth in the economy. Remember, I look at the economy and look at where is the economy going, how many companies are starting, how many are growing, and there's not enough there to make this a bull market. We're going to go into a bear market by the end of the summer, leading into the end of 2023 through 2024. Now, most traders are bullish because they don't know how to trade in a bear market. All they do know how to do is buy shares and buy assets, and hopefully they go up. But once those assets stop falling, they go into the headlight phase where they're blinded by the headlights and they don't know what to do. And that's where the real trader comes out and will be able to know how to trade bear markets. Now, we are going to go into a bear market. What's held up this market at the moment has been the hope that inflation is over, the hope that interest rates won't go up, and obviously the AI ChatGPT, which has become accessible over the last 2 or 3 months, has pushed up the tech sector. However, that is now fading, and all the excitement around AI and ChatGPT you will see die down over the next couple of months. The question is, what will support the Nasdaq and the tech sector as the weeks go on, when AI now becomes just a regular part of everyday activity? Remember, at the moment, there's no regulation or legislation regarding AI and ChatGPT at all, and companies and authorities will need to regulate that sector. Otherwise, we're going to have out of control robots roaming the street. Overall, over onto equity markets. Equity markets are falling slightly. That does not mean they're going to go crashing down. When I talk about a correction, I'm talking about correction over a longer term. I'm not talking about day trading from day to day. So the Dow is going to finish down probably a few hundred points. Nasdaq's beginning to fall. Slight bit of dollar strength. Cables coming off. Expect interest rates to rise in the UK on Thursday. There's a 80% chance now of a 25 basis point increase and a 20% chance of a 50 basis point increase. Andrew Bailey and the MPC, the Monetary Policy Committee in the UK, are worried. They were slow in taking action. They admit it, and that's going to cause problems going forward, pushing the UK into a recession. Bitcoin's interesting, touched the 25,000, dropped below 25,000, bounced up there. It's going to go down again, back to 25, maybe drop below that and go down to 22,000. So those of you who are crypto traders, you can expect a slight correction when it comes to Bitcoin. However, if it falls below 22,000, then you can expect it to go down to $19,000. And from there, it's anyone's guess, depending on where the economic environment is at that time. Oil, very lead indicator on recession, under pressure a little bit. OPEC will probably cut production again to try and support oil as we move on. Gold also stuttering a little bit, not really moving around here. However, as a long-term bet, you probably could buy gold, accumulate. China's buying huge amounts, Russia's buying huge amounts, and therefore it's probably going to go up longer term and break through the $2,000 level. So property is going to go down. Commercial property is under pressure in the US, in China, and it's going to be under pressure in Europe and in the UK. Residential property is being held up due to lack of supply. But once the rates begin, or once the new rates begin to kick in the UK, for example, when people come off their 3-year or 5-year fixed and have to take on a new rate, their mortgages are going to double or triple as far as monthly payments are concerned, and that's going to take more money out of the economy. So overall, you can expect the markets to hover around this level. We're not going to crash tomorrow or the next day. However, as the steam comes out of the AI and the ChatGPT sector, the tech sector will come off, and that will pull down the rest of the markets over the next few months. You're going to have a major crisis regarding regional banks as more and more companies default on their mortgages. Regional banks are going to suffer, and then the Fed's going to have to step in. Next crisis to watch is the regional bank crisis. You can buy my book on Amazon. I'm writing a new book now on trading, and you can share, subscribe, comment. Look forward to seeing you, speaking to you soon. This is Mayor Walensky with Driving Markets. Remember, anything said in this piece is an opinion only. Have a good day.